Good afternoon. Welcome to our weekly livestock update. I'm Brownfield news anchor and reporter Meghan Grebner. With us is University of Missouri livestock specialist Scott Brown. Good afternoon, Scott.
Good afternoon, Megan. Good to be on again this week.
Good to see you. We've got a couple of reports we're going to talk about, but first let's get into what happened this week in the livestock markets.
Yeah, so when you look at markets, it's been a tougher week, especially where we see futures that have gone. Cattle markets, cash-in futures, both down $5 to $10 a hundred. I know a lot of folks out there asking what in the world's happened to cattle markets this week. A lot of weakness in fed cattle prices as well as feeder cattle prices. You know, I guess when you look at hogs, up a little bit on the hog front, so a little better news this week. I will say the one for me, I thought we would start Friday afternoon by talking about the fact that we broke $4 corn. And now that we've seen the last 24 hours or so in corn markets, we've come back down 25 cents from hitting that $4 peak. So maybe feed costs pretty flat for the week, which is maybe different than where we'd have been just a day or so ago. So a little bit of good news on the feed cost side. And, you know, I keep looking ahead, and I hope we get continued good news on that front because from a livestock price side, it's hard to get terribly optimistic as we go through the remainder of 2016. I will say it's interesting in terms of the breakout. Both the choice beef cutout value and pork cutout value both of those are up for the week, which means some other folks in the industry are maybe doing better this week than they did a week ago. I point to packers as maybe margins widening a little bit for them, which in many ways may be positive news for that segment of the pork and beef industries. So there is maybe some stronger domestic demand still going on that is also helpful for us.
You bring up $4 corn. We saw beans rally again this week too. I mean, obviously we want everybody to be happy. We'd love for there to be a positive for livestock producers, for row crop producers as well. What are some of the things maybe is that the biggest concern as we see the volatility in the livestock market, is being able to have affordable feed costs?
Yeah, well, I will say it's the one bright side, and I guess I say that and not to be too negative for crop producers out there, but again, given what we got in terms of planting intentions a few weeks ago, if we get a really good crop in the bin, it seems to me we have more pressure coming on those prices. You know, if I was in the livestock industry, however, if we run out here in June and July and start talking about dry weather, we'll do nothing but raise feed costs. So I do want folks to understand that some protection along the way is not a bad strategy because we can have weather events. I don't see a 2012 unfolding in terms of those kinds of crop prices because we have a lot more stocks of corn and soybeans than we had when we went into that drought year. So. But prices can move higher, and we should be protecting ourselves on that front. So I sometimes go, if we can get corn pushed back down 20 or 30 cents, it might ought to trigger some folks to think about what do I need to do to lock in those lower costs.
Let's talk a little bit about reports. It's a pretty big day. Cattle on feed numbers, let's go there first, and some interesting numbers and news to come out of that report.
Yeah, absolutely, Megan. You know, so first of all, we do have more cattle placed on feed out of this report than we did a year ago. However, those placement numbers did come in below pre-report estimates. So maybe a little bit of good news there in terms of the actual placement numbers that we saw out of the report. I will say some are worried that we have a lot of calves that have remained on wheat pasture as a result of some frost issues in wheat country. So there may be more calves to be coming to be placed on feed as we look at next month's report. So don't want to cheer too much yet in terms of what's going on from those on feed numbers. I remind us, largest number on feed since April of 2013. We're growing cattle supplies, and we need to understand that's probably going to be with us here for the foreseeable future. And I always go, growing cattle supplies probably leads us to more pressure on prices as we look ahead. I sometimes, what's the silver lining we got out of the report? The heifer on feed numbers jumped out at me. I don't want to make too much out of that at this point, but up 4% versus a year ago. Now, remember, year ago numbers, I think we were holding a lot of heifers back to go into the herd. So we had a low number in 2015. The fact that we're up quite a bit in 2016 is, I think, due to both sides of that equation. We were holding a lot in 2015. We might be trying to, although, send the signal that folks aren't as excited about growing the cow herd as maybe we were 6 to 9 months ago. So we'll see if that continues. If so, maybe that's a little bit of positive news in terms of how many cows we show January 1 of 2017. So a little bit of good news in terms of that mix of heifers versus steers.
As we look at that, you mentioned a continued pressure on cattle prices. We saw Senator Grassley out of Iowa again this week bring up the drop in cattle prices and the significant drop in cattle prices. What do we take from this, and how do we evaluate all of this information and what's coming out of from the senator?
Yeah, so absolutely, Senator Grassley's, I think, making sure cattle markets are functioning correctly. I don't know what we'll see out of a GAO study related to those cattle price declines. I go back and remind producers all the time that if you'd asked me in 2015, what was the risk for cattle prices, I would have not told you higher. That there certainly was downside risk given the very lofty levels we attained in early 2015. However, none of us called for quite the severity of the decline that we saw, but very similar to what happened in corn markets in many ways. So it's good to be investigating what's going on there to make certain that pricing is occurring as efficiently as possible in these markets. I keep reminding producers this is another risk management area that's really big. As much as cattle prices have come off of those lofty highs of 2015, I'm not certain we're at the bottom yet. And thinking about when is the right time to lock in some price protection in terms of calf or cattle prices, I think it's important. I ask cow-calf producers all the time, how many of them have sold their fall 2016 calves yet? And I don't get many audiences that have a hand go up. And I remind them that we could have lower prices by the time we get to the fall, and we just don't do price risk management in cattle, especially at the cow-calf level, like we do in a lot of other commodities. So I think that information is important, that there's more volatility ahead, and I don't want folks to get caught in short-term volatility and miss some market price opportunities that might exist.
Scott, back to the report. Cold storage numbers also came out today. Any bright spots in those numbers?
Yeah, so we're actually down. When you look at what we got currently in freezer storage for red meats, beef down 5% relative to the previous month, down 3% from last year. Frozen pork supplies down 2% from the previous month, 9% from last year. We're down for the first time since December 2014, and so for me that's good in the short term. A little less red meat in storage. Just remember, as of recently as November of 2015, we were up 20% relative to a year ago. So cold storage stocks a much better situation than we've seen for a while, and I go, that gives me some encouragement. It might suggest to me that we're keeping domestic demand firm enough to handle the additional supplies that we're bringing to the marketplace here in 2016.
But it's never going to hurt if we can grow that domestic demand any, is it?
Oh, I keep saying, I think the story is we've got growing meat supplies coming, whether it's chicken, whether it's beef, whether it's pork. And the trade side, although I think can be helpful in some ways this year, it's going to ultimately come down to what consumers are going to be willing to pay in terms of what clears those markets. And strong domestic demand is certainly what we need in the mix for this year.
Scott, anything else this week?
I think we've covered the most important things. Again, I think we're going to be watching weather and see where feed costs go. But we're just talking about continued large supplies of beef coming to the market. Pork up a little over 1%. More chicken coming to the market as well. The story is more meat supplies as we continue to go through this year.
One quick question, I forgot about this. Weather, looks like there's some rain headed to the western like in the Kansas, Oklahoma area. Is that a good sign for those cattle producers and those in that part of the country?
I think so, Megan. You know, we've if you look at the drought monitor maps that we have out there, you're still seeing a little bit of dryness in western Oklahoma up through Kansas, stretches into Missouri just a little bit as well. Um, Last thing I think we need from a producer standpoint is another event like 2012 for the cattle industry. So hopefully we're going to get some decent rains as we look through the next few days. We want to keep an eye on that. You know, that might be one of the things that make markets move a lot differently than what we're currently expecting as we move through 2016.
All right, Scott. We'll see you next Friday.
All right, take care.
I'm Meghan Grebner for Brownfield.